Hey AWS family, this is Renee and Jay with this month's economic update. So overall, we are starting to be a little bit more conservative than we previously had. Some of those reasonings are that we're starting to see less confidence in AI and tech that we had previously saw last year. We personally are starting to see more layoffs within our clients, even though the national numbers still look okay. One thing that we are noticing is the institutional investors, so the pros, are starting to hold more cash and their portfolios becoming more defensive, where really it's the retail investors currently right now that are holding up the market. And they are really buying what those pros are currently selling. Holding cash in portfolios, you may say, why are you doing that? Or that may make us look a little bit lazy. But really that is a legitimate strategy and more of a defensive strategy. Right now there's some uncertainty. We're holding that cash, looking for buying opportunities until we have a better understanding of where we think the market is heading. When we're putting money to work, it's also putting your money at risk. So we want to be careful about that. It's really important in managing the down years over for long-term success.
So a recurring topic we've talked about now for several months is U.S. debt. If you listen to a lot of media and certainly online, you would think that everybody, all the other countries are getting rid of all their U.S. treasuries, and it's really not the case. Recently on social media, there was a lot of information about how China had told all of its small banks to unload all its U.S. treasuries. So a couple things about that. First of all, it did not apply to all of their large banks, but also China is still buying, even their smaller banks are still buying U.S. debt. They're just doing it through other countries. They're kind of doing it in a stealth manner. Basically, there is still really high demand for U.S. treasuries and U.S. debt. It's not a bad deal, so don't let what you see in the media or online make you think otherwise. Interest rates. We are seeing more and more information that might lead us to believe that interest rates may not be cut as much. The Fed may actually slow down on interest rate cuts. They may not even cut anything at all here in 2026. That means that bonds are not the place where we want to be, because if interest rates are going up, then bond prices are down. So just a couple of topics.
Just a few things that we have coming up. We're going to give our St. Patrick's Day basket giveaway, so be on the lookout for that. We also are going to have our economic updates in Cornelius and in Winston-Salem. So Amelia should be sending those out in the next few weeks just to give you an idea of when that's going to be. So make sure you get signed up for that. That's all we have for this month.